Hey guys, so in today's video, I wanted to talk to you about smart money concepts, specifically order blocks. So the reason why these strategies are called smart money concepts is because we're anticipating the footsteps that the banks and institutions have left behind so that we can actually follow them and get into trades with them and get out with them. So this is why the trading strategy is called smart money and is also referred to as trading with the banks, because we're essentially following their footsteps. So this trade right here today actually ended up netting me $3,339. And not only did I make profit, but I also sent this trade in my Discord as a sell limit where me and all of the members also hit 2.5% banked. There was also another GJ sell that we entered following the exact same framework, which also ended us netting us 2.5%. So overall, we banked 5% today, taking these two trades. So let's jump straight into it and break down this strategy. So when it comes to trading with the banks and institutions, we have to first understand the reason why the markets move. So all of this price action that you're seeing on the chart right here is going from liquidity to liquidity. Now, what is liquidity? Liquidity is simply areas in the market that price leaves behind that the institutions will target because there is a big bunch of orders sat either above it or below it. So if we take a look at this area right here as an example, we can see that because this was a local high, we know that a lot of people have their stop losses sat right above. Therefore, institutions will come and drive the price up so that way they can execute their orders here to take price in the opposite direction. Guys, I just wanted to take a minute of your time in order to let you know about prop firm passing. Now, the reason why I've decided to partner up with this company is because I've used them in the past before, and these guys are legit. They're super fast, super reliable, and they have very competitive prices in order for you to get your account passed. Now, jump in at Discord. I'll leave a link in the description below. They have a bunch of different prop firms that they can actually work with in order to pass the account and get you funded. And they have very competitive prices. So let them know that I've sent you, let them know that CEO Trades has sent you, and they can potentially get you a better rate or a bigger discount. But these guys are legit. And to top it all off, I think today they actually posted that they actually pay £50 per referral, and they have all of this documented in their Telegram channel. So I'll leave a link in the description below. They're super fast. They can pass your account on the same day. If you guys are interested in getting your prop firm accounts passed, please go down, click the link in the bio and hit these guys up. They are the real deal. Now, to put that into perspective, let's say you're somebody who has 100 iPhones to sell. If you take those 100 iPhones and you sit at home, what's going to happen is you're not going to sell them. In order for you to sell them, you need to go to an area where there is demand so that way you can sell these iPhones and get them off your hand. It's the exact same with the markets, right? The banks need to execute their orders, but because their orders are so large, they need to go to areas where there's a large amount of orders that they can then fulfill in order to execute their trades. So if we now understand that this is how banks work, what we first need to do is understand our directional bias. So if we take a look at Euro USD on the 4-hour time frame, we can see that we're creating a series of higher highs, higher lows, higher highs, and higher lows. So when we get to this area right here, we can see that we've got this. We've got all of this liquidity that's built up. So what does that mean? Right below all of this liquidity is where a lot of people have put their orders, whether that be sell stops, whether that be stop losses for their buy trades. There's all of these orders that are sat right below all of this liquidity, which means that the banks want to take that out in order to drive price the opposite way. So now that we have that understanding, what we need to learn is that when the banks come here and take these orders out, they will push price the opposite way, and then they also need to take profit. So where are they going to take profit? Now, if we follow the exact same framework that we just looked at on the higher time frame, we will start to understand that the banks also leave these footprints on the lower time frame. So if we drop down to the 1 hour, lower lows, lower highs, lower lows, lower highs, lower lows, right? So in order for us to frame up a trade, we need to know where price is going to go and where the banks are going to take the price. So if we take a look at this key bit of price action right here, we can see that we got this lower low, lower high, lower low, then we got this lower high. Now, can you see something peculiar? We can see that right here in this area, we've got a double bottom. Now, what does a double bottom mean? In terms of a trading strategy, we know that a lot of people have bought right here, and what do they do when they buy right here? They put their stop losses right below. So that means that right below this double bottom, there's a whole bunch of stop losses that the banks would love to target. Now, the banks have engineered this liquidity so that way they have somewhere to go once they've executed their orders. So if we now take a look at the most current price action, we'll see that we've got a lower low, a lower high, a lower low, which created this double bottom, and then an immediate push in the opposite direction. So when we take a look at this hourly candle, we can see that all of this momentum came suddenly into the market after this double bottom was created. Now, when you understand that this is something that is engineered in order to entice buyers into the market, we'll slowly start to understand what the banks are trying to do. So what do we do in a scenario where we see something like this happening? Well, the first thing that we need to do is we need to understand that now that this liquidity has been engineered, price needs to stop somewhere to go the opposite direction to target this liquidity. So if we drop down to the 15-minute, we can see that right here, we had the exact same thing happening where there was this high, which if we look and zoom in, we can see that it got swept and immediately price went the opposite way. Now that means that just like the higher time frames, on the lower time frame, this piece of price action was engineered in order to take out all of the stop losses and buy stops above this area in order for the banks to drive price the opposite way. So the exact same fractal nature that happens on the higher time frames also happens on the lower time frames. So then when price comes down here and gives us this double bottom, we know that price is eventually going to come down to take out this liquidity pool. So now we can start framing up our trade. So let me replay this so that we can do this together. So we know that this is a very high area of confluence because this is where the smart money, the banks and institutions have engineered price to take out the liquidity to drive it the opposite way. So because they've engineered this piece of price action, price needs to come back up here in order for the banks to close their positions before taking price the opposite way. So now that we've identified our order block, which is where price took out this liquidity, we now wait for price to actually come back so that we can start looking for an entry. So if I play price forward, we can see that the Asia lows were taken out and then price came up into this order block right here. Now, this is where things get super interesting because the exact same fractal nature of the markets that happens on the higher time frame again will happen on the lower time frame. So if we actually drop down to the 1 minute, we'll see that price came into this 15-minute order block. After it came in here, it started to slow down. Can you see that the momentum of the market was rapid here? And then we have this very corrective price action. That means price was getting delivered in a corrective way, taking out all of this liquidity that's up here so that price can plummet the opposite way. So we've now tapped into the 15-minute order block. Now we're waiting for a true confirmation of market structure shift so that way we can actually take an entry and go with the flow of the market. So now we're waiting for a market structure shift, but because this is such corrective price action, what we want to do is go just a little bit higher onto the 5 minute so that we can identify the correct market structure. And then we want to come back into the 1 minute and wait for price to actually give us that true market structure shift, which we get right here. So now that we've got our market structure shift on the 1 minute, we now know that price needs to come give us an entry so that it can continue to go down to take out that liquidity pool. So what do? We identify our fair value gap. We put a sell limit right there with stops above the most local high. And our target will be the opposing liquidity, which is sat right under here. So we put our targets there, right? So now if I play price on, we can see that price actually came up, tagged us in, and immediately started to drop. It got a bit choppy, but then it dropped. Look at that. Straight to the target and netting us a nice and beautiful $3,339. Now, you must be asking why I exited right here and not down here at the liquidity pool. So the reason why I targeted right here is, number one, I wanted the Discord members to be able to bank some sort of profits. Now, the second reason that I placed my take profit at 2.5% instead of targeting the liquidity is because I was a bit wary for the members in the Discord, because at 3 p.m. we had all of this red folder news. Not only 3 p.m. but from 10 a.m. this morning to 2:45, 3 o'clock, we had all of this crazy news coming for the US dollar. So because of this, I didn't want to take any chances so that the guys in the Discord could actually bank some profits, right? So for my analysis, what I like to do is I like to use fastball.com because their economic calendar has the most insane user interface as opposed to a lot of these other websites. Now, the reason why I love it so much is because not only can you filter all of your daily news by impact, but it also gives you an indication as to how particular instruments will be affected, whether they'll be bearish, whether they'll be bullish, or they'll be neutral, right? So the user interface is really clean and easy to use. Not only that, but if you're somebody who's on the move quite often, they also have a downloadable app so that you can always have this in your pocket, so that no matter where you are, you can always keep on track with all of the news events that are coming out. Now, not only are they good for the economic calendar, but they also have an entire area where they have all of the news that's incoming all over the world, all in one place. So instead of paying for some news website that's going to cost you, hundreds of pounds a year, this is going to give you all of the most trending news right here for free. So they have amazing news, they have the economic calendar, and they have all of these things where you can get analysis from institutions and analysts, AI signals, and they're continuously improving day in and day out. And because of all of this, I absolutely love using Fastball for my trading analysis. So this was another reason that I didn't take profit all the way down at the liquidity, because I wanted to be safe for the members in my Discord, because I used the calendar to make sure I was well aware. So the reason why I targeted right here and not down here is if I actually play price on, you will see that as we drew closer to 3 o'clock and the high impact news was due to come out, I just wanted to close out the trade. As you can see, it started to get choppy and it just started doing all of this erratic behavior, and that was because you'll see in a second, and bang. Now that is high impact news, right? But can you see something peculiar again, right? Look at that. Price came and took out this liquidity pool and shot the opposite way. Now isn't that crazy? Price came and targeted this liquidity pool and shot the opposite way. That just goes to show you that the banks were coming for this area. And we knew that from the beginning because this was all engineered. This double bottom was engineered and left here on purpose because everyone who's trading chart patterns such as the double bottom would be having their stop losses right here. So that was the reason why I took this trade, and I only took 2.5% as opposed to me taking a full 4%. So I'm happy with the gain on the account. Yes, I left some money on the table, but at least I didn't get stopped out, because I would have been stopped out at break even right here. So the analysis was perfect. We understood where the banks and institutions were going, and we capitalized on that move. So I hope you guys enjoyed this video and gained some insight into exactly what it is that I'm talking about when I say banks and institutions and smart money concepts. If you did enjoy this video, please don't forget to leave a like, comment, and subscribe. And if you do want to see more videos of these trading strategies, please do let me know, because this is the first time I've filmed this. So if you have stuck to the end and you have gained some understanding, please leave a comment letting me know that you enjoy these kinds of videos, and I'll start posting more, because this is also one of the key strategies that I use on a day-to-day basis. So thanks for staying to the end. Thanks for watching, guys, and I'll see you in the next video.